Okay, good afternoon, everyone, and welcome to another episode of College and Career Pathways, where every Monday, Wednesday, and Friday we provide you with information on various colleges and universities, financial aid resources, technical schools, training programs, skilled trade professions, career readiness skills, all designed to help you make the best decisions possible regarding your career. I'm Toni, Cureton, your host, and today we are back with Michigan Schools and Government Credit Union, and they are continuing our financial literacy series. And Colleen, we're so glad to have you back. Today we're going to be talking about predatory lending. Go ahead and take it away, Colleen.
All right. Thank you. Thank you very much. Predatory lending. Yes, we've talked about lending so far in a positive, in a necessary, in a, how to do it responsible way. Now we're looking at the other side. This is actually one of my favorite videos, though. So that's a bonus. Oh, whoops. I got to make sure the sound is included. Hold on.
Do you need $1,000 cash fast? Guaranteed approval, no credit check required.
Are you a loan shark?
A loan shark? You're funny. We don't like that term. We prefer the term money lender. Loan shark sounds so...
Accurate?
It makes us sound so predatory. As though we target innocent prey in desperate situations, tear them apart and eat them alive. You are perhaps familiar with my extensive network of payday and title loan franchises. Cash Quickly, Money Time 9000, Say Yay Payday, eCash-O-Rama, Give Me Money Plus, Cash Fix Fast.
Isn't Money Time 9000 the one with the really dodgy commercials late at night? Or is that the one with the reality TV spokesperson?
Does it really matter? The important thing is that we have the cash to make it happen.
To make what happen?
Your, whatever emergency and or desperate situation you're in. Car breakdown, unexpected medical bills, want to go shopping but can't wait until payday? Yeah.
Okay, 1, I have an emergency fund in my budget to look after stuff like that. And 2, I'm not sure that shopping is a valid reason to take out a loan.
There are plenty of good reasons. Instant approval, fast cash, less than perfect credit, no problem. Call in the next 5 minutes and you can have $500 by tomorrow.
I appreciate your enthusiasm, but that does not sound reassuring at all.
Look, I'm not here to judge. I don't know why you need the money.
I don't need the money.
But I do know that $500 in your pocket can really help you out. Just get the loan.
But
Get the loan.
I really don't.
Just get the loan.
Okay, let's say I do need $500 before payday. Taking out a loan means paying back the money plus interest. What's your interest rate?
If you pay it back within 10 days, you'll be fine.
That's not what I asked. What's your interest rate?
Instant approval, no credit check needed.
Give me that. 550% APR?
It's not that high.
I think my credit card interest rate is high, and that's 15%. This is 550. If I borrowed that $500 for just 1 month, I'd owe like $80 in interest.
Oh, and plus late fees.
At this rate, if something happened and I couldn't pay back the loan for an entire year, I would owe over $2,500 in interest refinancing every month. Borrowing $500 today would give me $3,000 of debt. Is that not crazy to you?
Well, we can help keep that from happening. For $25 a week, we can extend that original loan so you don't have to default on it.
So if I can't pay the loan back all at once, on top of the interest, I would also pay you $100 a month just to keep it from going to collections? What if I can't cover $100 a month?
Ooh, take out another loan. Yeah, fast cash in your pocket by Friday.
Are you crazy? These loans are outrageously expensive and targeted at people who are clearly in a tight spot to begin with. How is this even legal? Don't you have any rules you have to follow?
Of course there are. There's all sorts of legislation surrounding short-term lending. But my businesses happen to be registered under a slightly different sector. So I don't have to follow all those boring rules exactly.
Money Time 9000 Payday Lender and Island Adventure Tours.
We put the fun in fundamentally unsafe.
Right. Well, thanks for the info. I'm not going to take out a loan, so please go away.
I didn't want it to come to this, but if you don't take out that loan... Hey, there's a shark in the pool!
I'm just gonna...
Dun-na. Dun-na. Dun-na-na-na-na-na-na-na-na-na-na-na-na-na-na-na-na.
All right, very cute, very cute. Okay, so that was an introductory video to loan sharks. Lending and borrowing so far has always come from the consumer. I need money because I'd like to buy a car. I need money because I'm buying a house, because I have this reason for it. So in that case, he just kind of walked up to her and was trying to convince her that she needed a loan. So keep that in mind, certainly. Oops, that is just kidding. There we go. Identifying abusive and unfair lending practices. And this is something that's really, I don't want to say only recognized, but has really started to be addressed within the past few years, where there's laws in place and they're trying to keep up with it to identify and stop these abusive practices. So predatory lending comes in many forms. It doesn't always have to be as obvious as a loan shark. And we'll look at each of these individually. It could be, a payday loan place, a pawn shop, having even a prepaid debit card at times, or a financing company. A pawnbroker, what a pawnbroker is, it's individuals, it's usually a business, and they offer secured loans to people for their property as collateral. Now, what that really means is, I need money. I need money to get my car fixed, and I don't have money. Let's see. I have this really expensive pen here. This pen is very valuable. I really don't want to part with it, but I'll go to the pawn shop. How much will you give me for this pen? $50? $50. Okay. I'm going to come back in 2 weeks with $50 and buy my pen back. Okay. I'm going to come back and buy my pen back. But if I don't come back in 2 weeks, you can sell my pen. So I got the $50 I need. It's not quite selling your item, because you do have that kind of opportunity to buy it back from yourself. It's a temporary, let me have that $50 so I can take care of stuff until payday. Then when I get paid, I'll come back and buy my pen. So it may be a last resort for some people, a Band-Aid. I just need money for another few days. I just need money for another week. This may be a way someone can get money for something they own that's of value. Now, let's say I said, this is a nice $50 pen. I bought this pen for $50. Wow, it's very valuable. Pawn shop's not going to offer me $50 if that's the case. Pawn shop might offer me $10, $15, maybe, because if they're going to sell it, they need to make a profit. So if they're giving it to me for $15, they've got to sell it to someone else for at least $20, right? So the items you're pawning, you're not really getting the true value. You're not getting what they're really worth. Would I sell this to a friend for $10? Absolutely not. Would I pawn it temporarily? Maybe. How badly if I need the money. Payday lender. Payday lender is probably what most people think of when they think of predatory lending. Payday lenders are kind of like credit cards in the sense that they have a purpose and they fulfill a need, and they have a demographic who they're created for, and it could help your situation. But if you're not truly paying attention, really on top of things, asking a ton of questions, it's very easily going to become a trap, a negative situation. Payday loans, again, are temporary. They are called payday loans because they're literally until your next payday. I got to fix my car. I got to fix it now. I don't get paid for 2 weeks. I need $300. And then when I get my paycheck, I'll give you the $300. So it's not the same thing as going and getting a thousands of dollars of loan that you'll be paying back for years. They're small, short-term 2-week loans. Prepaid debit cards. A prepaid debit card is typically not considered predatory. However, they have been criticized because they do make things a little more difficult. There's companies that will pay you on a prepaid debit. They'll issue you this prepaid debit card and they'll just add money to the debit card. And you may say to yourself, okay, well, that's the same thing. I can use my debit card to buy things. I can use this prepaid debit card to buy things. What's the difference? The difference is when money is sitting in your bank account, you can pay bills online. You can go to the ATM and get cash. If your money is sitting on a card, well, how do you pay bills? How do I pay my cable bill? Okay, well, how do I get cash off of it? There's a fee. There's a fee for all of those things. And it's a fee that you'll have to be paying probably multiple times a month, depending on your situation. It's just not a great long-term solution. Someone gives you a prepaid debit card for short-term, okay, but it's not a good long-term situation. Loan sharks. Loan sharks are those individuals or groups. They're offering you these loan rates. They're trying to help you. They are seeking you out, right? They are going above and beyond to make themselves available to you. And you being in a really tight spot. Unfortunately, loan sharks, payday loans are for individuals with low income. They don't really have any wiggle room. You know, I get paid $300 and I spend every single penny of that before the next paycheck. I don't have another way of income before then. Or someone with a really low income who, you know, the car broke down. They need medical treatment. They apply for a loan at a bank or a credit union and they're declined. You know, they don't have a good credit or it's too expensive. So you go to a loan shark. Loan sharks, or you go to a financing company, excuse me, you'll go to a financing company and they'll offer, of course we'll lend to you. We'll lend, no problem. You hear in the video, you know, no problem, no credit check. Everybody's approved because we're kind of counting on the fact that you're not going to make that payment so that we can keep charging you more and more and more and really keep you in a cycle of debt that really creates a problem. Loan shark refers to illegal activity, but predatory, you know, when a loan is misleading or an advertisement is misleading or it leaves information out, I consider that predatory. That's preying on someone who doesn't have all the information. All right, looking for telltale warning signs. All right. How do you know? How do you know if this interest rate is a normal interest rate or a predatory interest rate? How do I know if I'm being taken advantage of? All right, first thing, failure to present loan prices as negotiable. Negotiate, conversational. Most reputable lenders will negotiate the structure. All right, you want $5,000 over 5 years? Well, we were really hoping it would be over 3 years. You can only pay over 5 years. Well, we'll allow you to pay over 5 years, but we might raise the interest rate a couple more points. You know, it's a back and forth. I'll give you a 5-year loan, but maybe I'll only loan you, less money, you know, than we originally agreed upon. If a loan is offered and it's just take it or leave it as is, that's it, take it or leave it. And you're like, well, what if nope. Why not? Why are you not willing to work with me? Don't be afraid to ask. They might say, well, it's going to be 5 years. That's all you get. Well, are you sure I can't get it into 3 years? Are you sure I can't get a lower interest rate? What would I need to do to get a lower interest rate? Same thing as buying a car. Thinking back to buying a car, If they're not willing to go negotiate, nope, take the car as is. I'm not letting it looked at. I'm not, well, it's a red flag, definitely. Unjustified risk-based pricing. Now that's kind of a tough term. Let's read. This is a practice of charging a lot more in the form of higher interest rates and fees for extending credit to customers who are identified by the lender as posing a greater credit risk than others. So I was saying it's that demographic who are declined, they're denied credit from a typical financing organization. So the only one who'll say yes are these financing companies, and they know you have to come to them because it's your only option. And we know that you're risky. So we're going to charge you way high interest rates because you don't have anywhere else to go. You were declined from the other places. This is your only option. If you want to come to us, this is how much it's going to cost. Well, I don't know, that's a huge red flag. While a modest increase, interest, paying interest on a loan is fair. A modest increase to cover a potential loss is justifiable. Watch out for exorbitant rates. I'm borrowing, it gives an example here, borrowing $300 for 2 weeks, and it's a $50 fee. I mean, that's a lot of money. So if the rates or the numbers seem way too high, failure to clearly and fully disclose terms and conditions. And again, for any agreement, buying a car, buying a warranty, buying an apartment, anything, fully understand each page. There's a lot of fine print. Even if you don't necessarily read the fine print, ask them to explain it. An unsophisticated borrower is kind of just an uninformed, uneducated. They don't know that they have other options, or they don't think it's worth it, or this is all I can get. That's what they told me. You want to be a sophisticated borrower. You want to be one who asks questions. Mortgage loans, buying a house, are very complex. There's a lot going on. There's titles and inspections and appraisals, and they have to pull all 3 of your credit reports. And it's really easy for them to slide in extra fees, slide in extra costs at closing, underwriting fees, oh, well, we didn't mention that, or, oh, well, that's just part of it. And pretty soon you've signed on to things that are now a whole lot more expensive than you thought they were. Failure to fully disclose can also be as egregious as purposefully misleading a customer, right? We were talking about buying cars we were talking about leasing cars and how they want a low mileage, right? You have to turn the car in without a ton of miles being driven. And I meant to show you this ad, which I forgot, and it was talking about a lease, and it said ultra low mileage with an exclamation point. And you look at that and you're thinking, oh, it's got it's got low miles. This is perfect. No, that's not what they mean. It's a new car. They mean you have to give them ultra low mileage, but that's a misleading advertisement, right? Are they misleading you on what's going to happen? Are they skipping parts? Understand what happens if this, what happens if I don't pay? Well, what happens after that? Well, what happens after that? I want to know. Short-term loans with disproportionately high fees. This is similar to the previous one of the risk-based pricing is just out of control. I mean, it's understandable. The lower your credit score, the higher the risk you are, so the more interest you're going to pay. But if that interest is like in the video, hundreds of percent, 500%, 400%, that is disproportionately high, too high for what it is. Short-term loans can be a payday loan, credit card late fees, checking account overdraft fees, tax refund anticipation loans. There are so many different fees you may have to pay if you're not paying attention. The fee for advancing the money for a short time works out to an annual interest rate significantly in excess of the market rate for high-risk loans. Now, what that means, if you have a car loan with 5% APR, 5% interest, that means the annual interest that you're paying is 5%. What they're saying here is, oh, it's a 5% loan, but it's a 2-week 5% loan. So what's a 2-week 5% loan when we put it for the whole year? That number's a whole lot bigger. All right, perfect. Understanding annual percentage rate. Because again, it's that interest rate. Knowing the annual percentage rate is the key to your borrowing. Annual percentage rate. Make sure you're asking about annual percentage rate, not just interest rate, not just fees, but what's the annual percentage rate on this loan, right? That's the number I'm concerned about. As a form of consumer protection, banks, credit unions, and financial companies are required to disclose the cost of borrowing in a standardized way to compare lenders and make it easier to compare lenders and loan options. In the United States, the disclosure, which means telling you about the APR, is governed by the Truth in Lending Act. So that's new. That's a new law, Truth in Lending, requiring those who lend. If we're looking at our credit card bill and it says, if you pay the minimum payment, you're going to spend this much and it's going to take this long. That is all part of this Truth in Lending Act, right? Is to put right there in black and white on the credit card statement. This is the interest rate. This is the minimum payment. And if you pay, if you only pay this much, it'll take this long. If you only pay this much, it'll take this long. They have to put it right there for you to read. They can't just assume that you're going to read the fine print. So the Consumer Financial Protection Bureau, CFPB, has really worked on credit card, truth in credit, truth in lending acts to really hold accountable these companies. So here's an example. So $300 is a decent payday loan. You get into your car breaks down, you need a new water radiator, water pump, who knows, and you don't get paid till next week. So you go, you can't really get a $300 loan from a bank. If you go to a bank, you're going to be asking for a $3,000 loan or $30,000 loan. $300 is too small for a big bank, a big credit union to deal with. They want to offer you a much larger amount because $300 you'd pay back very quickly. So the offer that this payday loan company is presenting is, well, we'll give you $300. You can keep it for 14 days. We want $300 back or on the 14th day, but it's also going to be $50. The fee for us lending you the money is $50, a $50 flat fee. And you're thinking, okay, $50 fee, man, $50 just to borrow $300? When you think about it, when you think about what's the percentage of 50 out of 300? Look very closely. If you took 2 weeks to pay back this loan, you'd be paying $300 plus the $50. If you had to extend this loan for another 2 weeks or another 2 weeks or another 2 weeks, it's a 435% APR. And that is going to be written in the fine print. 13 $1,500. This is exactly why I have a job. This is why I'm here. I do not want you to be in that situation. If you have to go to a payday loan and get $300 to fix your car, let come hell or high water, you pay that $350 back on the day it's due. You must pay it on the day it's due, because again, these payday loan companies are kind of expecting you and encouraging you to not pay it back on time and just borrow more. So how does it compare? Let's say you needed $300. Okay, if you were going to this payday loan company, it's a $50 fee, but that APR is insane. A credit card cash advance is, instead of, buying a purchase with your credit card, it's actually pulling cash, taking cash out of your credit card, using it kind of like an ATM. You can do that, but I don't mention it. I didn't mention it because there's a fee to do it. So you can just get it from your ATM for free. But if you decide to do that, you're going to have to pay a fee, 36%, very high fee. Overdraft protection, if you have a checking account and you spend $300, so you let it go negative $300, that's possible. Well, now you have an overdraft fee. Okay, well, it's $25, $30, that's expensive. You could borrow from a line of credit. A line of credit is kind of a revolving loan, like a credit card without the card. That's only a 10% interest rate. So this is the part a lot of people don't think about. If you're willing to go to a payday loan place and pay a $50 fee, look at the other options. Can you pull money from a credit card? Do that. Pull that $300 from a credit card. Is it going to be, a fee? Yes. Is it going to be less than $50? Yes, probably. Even if you have to go negative $300 in your checking account, a single overdraft fee, $30, is less than getting yourself stuck in this cycle of debt with a payday loan. So admit, okay, I'm gonna have to pay. I'm gonna have to pay probably a decent amount to get this money, but payday loans are not the only option. If it's a trap, avoid the debt trap. If you get behind on a traditional loan from a bank, a credit union, you have a late fee, right? I don't pay my $50 bill this month. Well, then I have a $100 bill next month, plus maybe a $25 fee for being late. The payday loan forces you to pay the fees every month. In the end, revolving fees increase your debt load and financial hardship. So in this situation, the person who borrowed $300 for the car, and now it's time for payday. 2 weeks have gone by, and they spent the $300, and I mean, they've really already spent their paycheck too. I mean, I don't have a spare $300. I need all of the money that's in my paycheck for groceries and for the light bill and everything. And the payday loan company says, sure, no problem. We'll extend it. We'll give you another 2 weeks. You can have another 2 weeks, but we'll give you a $50 fee. And you can have another 2 weeks for another $50 fee. And that is a terrible. Okay, so this is from the previous slides. So getting back to the debt cycle, they may encourage you, if you can't pay back this $300, why don't you take out a $500, now take out a $500 loan so that you can really pay all that stuff. And the next time you get your paycheck, you can give it to us. Because the fees are so high, $50 on a $300 loan is extremely high. It's the end of 2 weeks. You don't have that 350. You only have 325. So if you don't make your payment, you completely miss a payment, which in this case, if you don't pay, it counts as a missed payment, and it can be reported to the credit report, sent to collections. The payday company will send to collections, just like your landscaper or your doctor's office or your cleaning lady. If they don't get paid what they deserve, they will sell that bill to a collections agency, and that will show up on your credit report. And you don't want that. You don't want that. It looks bad. It's a huge red flag. You don't want collections. So the payday loan company is convincing you, well, we won't put, it won't be considered a missed payment if you take out another loan. If you extend the loan, then you're still in it. You know, if we just keep extending this loan, you're never quite behind. You're always just waiting for the next due date. And on one hand, people do this kind of to keep from paying, so to speak. You know, I'll pay you the 300, but I need to borrow another 500. I pay you that 500, but I need to borrow 600. I'll pay you the 600, but I need to borrow 600, where you're never really paying the money back because you're continuing to borrow money. But every time you do that, there's a $50 fee or $25 fee or more. I mean, that is, they said $100 a month, $25 a week to keep your bill from going into collections. Now you see the trap. Now you see, well, I didn't have $350 to pay back, so I had to pay an extra $100 to extend it a month. But now I owe $450, and I really don't have $450. I'm going to have to extend it for another couple of weeks, and that's going to be another $100. And it's very, very difficult to get out from under a payday loan because you end up owing such a high amount, like $1,300, that you feel so trapped of continuing to get payday loans. Like this slide here. When I talk to adults about this, because this is usually payday loans are a last resort, right? They've exhausted their other options. I'm saying keep going with those options. Whatever you're willing to do, if you're willing to go into the negative, if you're willing to ask that family member you really don't want to ask, if you're willing to, you know, suck it up and ask your neighbor if you can cut their grass for $30, anything is better than getting stuck in this trap. Even if you go take out a loan from the credit union for $1,000, you know, it's still going to be a lesser interest rate, even if it's a very high, even if it's 15-20% interest, that's still way less than $400. If you're considering a payday loan or pawning an item, talk to someone in a credit union, see if there's other things we can do. Maybe we can shift something around, pull money from the credit card, or maybe skip a pay on your payment. Maybe we can, skip a pay on a car payment this month, so then you can use the car payment money to fix the car. Go through any possible scenario, anything. Ask multiple people, multiple credit unions. There are options out there. Even if it's expensive, it's less expensive than a payday loan. And I encourage you, go look it up, go to YouTube. There's a lot of great stuff. 2020s or Datelines type thing that they've done on, investigating payday loan companies and the legality of it, because just like the Jen said in the video, this certainly doesn't seem legal. What's happened is, just like you said in the video, the payday loan companies are not lending companies, we're title companies or we're mortgage companies. So we don't have the same rules. Okay, you're a mortgage lending company like Quicken Loans. Okay, but I'm asking for $300. What house costs $300? You're lending out $500, $600 loans. People are not getting a mortgage for that much. They're switching things behind the scenes to make it the most profitable for themselves. They know you are in a tough spot. They know this is your last option, and they can convince you probably of a lot of different things, or negative, threatening. You have to pay this back. If you don't pay this back, we're going to come to your house. We're going to call your boss at your job. We're going to show up at your job. We're going to, it could turn into something horrible, right? It's okay. Miss Cureton, can you think of any questions you have about predatory lending? I did include, this is what I was looking for. I sent a handout to Miss Cureton, and on this lists the other options you should try, even in advance from your employer, even asking your boss, even going to, an emergency assistance like WIC or assistance from the city, something so that you are not stuck in this payday loan debt. It will be a long-term cost for you. So I really recommend holding on to this and reading what you can do besides going to besides going to a payday loan place.
Absolutely, Colleen. Excellent presentation. There are many resources out there to assist people if they find themselves in an emergency financial bind. There are utility assisted grants out there available to cover your utilities so that they don't get interrupted. There are many other ways for you to cover that emergency that comes up. But the most important way, and this is what this whole financial literacy series is about, is you putting things in perspective and not finding yourself in debt in the first place because you are living beyond the amount of income that you earn. And so it is, as Colleen says, once you get into this vicious cycle in this hole, it is extremely challenging to get out of. And so to avoid that, make sure that you put money away in savings. I started the 52-week challenge at the beginning of the year. And if you put $1 away, $2 away every day of the week, you will accumulate a nice safety cushion of money that could be there to help you in those times where you have this unexpected emergency. In that 52-week challenge, where you put away $1 away every day. Right now, I am up to $500 in that put $1 away every day, and I'm up to 1,000 because I doubled it. So I did 2 of them, one for $2 a day and the other for $1 a day. And so I now have $1,500 of emergency money available if something comes up. And you can do this, and it's so much easier than you think, and it's so much better because now you're not in debt to anybody if an emergency comes up.
Right. Those small amounts, like you said, $1. You're not
Absolutely.
necessarily going to feel that pinch.
Absolutely.
And $300. I mean, that's a savings account. That's a rainy day fund. I mean, the thought of just $300 causing so much havoc on
Yes.
someone and their family is really sad. And it's so important to, I mean, if you had $200 saved, if you had $150 saved, it could keep you out of this, situation. So there's people to help, but there's people who help. So be careful who helps you with your finances.
You guys have any questions that you want to ask Colleen? All right, then we will bring this session to a close. Thank you again, Colleen. It's always a pleasure. And we'll see you next month. And we'll see you guys on Wednesday. Everybody have a great day.
Have a great day.
Good deal.